A very good evening to all of you. Hope all of you are doing well. So, thank you all for joining this webinar. So, the agenda for this webinar is to talk about a new fund offering, Mirae Asset Nifty Metal ETF, which passively replicates the Nifty Metal Total Return Index. So, the Nifty Metal Index tracks the metal and mining companies listed on the National Stock Exchange. So it's a passive product, and over this presentation, I'm going to take you through how metal can be a good addition to your overall portfolio and how is it different from the other products present in the market. So let's try to understand metal from the very basics. So the metal sector is one of the oldest sector in the Indian economy, and it gains back its prominence right from 1947. So it has been a very big contributor to meet the overall industrial demand and also has been a big support to the evolving manufacturing sector. So it has gained its prominence since independence. So it was the very first sector which had received the boost of investment under the FIRE plan. So let's go back to some history and try to understand how the metal sector has progressed over the years. So going back to 1947, as I previously mentioned, so metal sector got a boost under the FIRE plan. Over the next 10 years, there were policy framework laid out for the for the metal sector with new policies such as industry policy resolution and establishment of the Indian Bureau of Mines. There was a good policy framework laid out for the sector. The major move came when there was liberalization in the 90s and foreign direct investment was allowed in these sectors, and this particular sector, and it had opened the doors to new global players in India. If we go back to the next decade, go back to the previous decade, that is from 2014 to 2024, the government has increased its overall focus on the metal sector. The Ministry of Mines have taken various steps so that there is increase in the overall production capacity. They had revised the royalty rates, and after that the government in 2019 came out with the production linked incentive scheme, which had a good amount of outlay for the specialty steel segment. So going forward, government has always emphasized more on spending more on infra, and there would be more spending on sectors like capital goods, industrial, railways, shipyards, and all this demand is going to be met through the metals, and all a major amount of demand is going to be met through the metal sector. So if we just talk about the infra spending that the government has planned, 25 to 30% of this demand has would be met through the metal sector and in the domestic market. So going to the next slide. So whenever we talk about any major economy, so let's take the example of Middle East over here. There is one inherent factor that has, been the prime booster in boosting the economy. In case of Middle East, it was the oil which propelled the economy, eventually led to increase in their export revenue and transform the nation as a whole. When we talk about a country like Australia, there was iron ore and coal, which contribute to as good as 25% of the total exports. So that again eventually had more export revenue, had generated more export revenue for the country, and you know that now Australia is a developed economy. Similarly, we have India. So the availability of resources plays a crucial role in transforming an economy. So India also has some of its strength in the metals and mining sector. It is a producer of major metals and is a and it's a big exporter of steel, aluminium, iron ore to many of the global counterparts. So just for highlights, India is the second largest crude steel producer in the world. It has the second largest production capacity of aluminum in the world. It is the third largest lime producer in the world, and it is the fourth largest producer of iron ore in the world. And if as of FY 2022, the data is a bit dated, but there were close to 1,300 mines in India, where more than 545 belong to the metallic sector and around 775 belong to the non-metallic sector. The next slide showcases how the production capacity of minerals has increased in the past years. So this slide showcases from 2018, where the production was around 74,000 crores, has now increased to a staggering 1,40,000 crores. It has almost grown by 90% in the past 6 years. And what has the reasons that have led to this increase? So this can be attributed to two simple reasons. First, as the economy grows, the demand for the spending on infra increases, and sectors like metal benefit most. And if we talk about the second major advantage that this growth is going to continue, is the demographic dividend that India has. So the average age of in the Indian population is under 30, and 50% of the population falls under this age group. So as the income levels of this under 30 age group rises, there will be more demand for auto, housing, and construction services. And again, metal would be a one big supplier over there. So India, as of today, is involved in production of as many as 95 minerals, including 4 fuel minerals, 10 metallic minerals, 23 non-metallic, and 55 minor minerals. If you have a look on the right side, it shows the export-import of minerals. And India, as of today, stands a net importer. And the reason for that is pretty straightforward. So in terms of all the commodities, we import crude oil the most, and we have a rare presence of critical minerals like nickel, cobalt. So we are still 100% import dependent on other countries for that. But again, as highlighted in the previous slide, we have the fourth largest bauxite reserves. We are the second largest steel producer. That also contributes good to the export side. And going on, the government is spending more and is launching initiatives the boost the overall to increase the overall output of the metal sector. So let's talk about the first subsector in the metal industry, and that is steel. And majority of companies in India do fall under the steel subsector. So if we talk about steel, it is the most widely used metal in the overall. And the reason for that, it's the properties that steel has. It's the most durable metal, and it is the most widely used metal in buildings, in construction, in shipyards, in railways. And it's almost used in every house, in every construction activities that takes place. So steel is one important metal that India also like where India is a major producer. So we can segregate steel into three buckets. So the first stage one steel is known as the crude steel. The second, the processed version of the first stage, is known as the finished steel. And the third steel is known as the specialty steel, which is again obtained through some electroplating of the stage 2 steel. So let's have a look how India ranks in crude steel production. So the overall cumulative production of crude steel was around 144 million tons. Finished steel, the second stage, stood at 138 million tons, and the consumption of this finished steel stood at 136 million ton in the end of FY 23-24. And going forward, if we just talk about this fiscal, it's expected to grow at a good 7-8%. The next sector that we are subsector again we are talking is specialty steel. As mentioned in the previous slide, it is the stage 3. Now, how is specialty steel different? Again, as the name suggests, it's a high value product that's obtained by electroplating the finished steel or heating the finished steel. And why is it so special? Because it has application in high tech industries. So on the left side, if you see, the products like coated products, high wear resistant steel, alloy steel products, and electrical steel. These are some specialty sector subsegments that have and the products that have been used. And since it's a specialty segment, India right now is a small player in this field. It has limited amount of manufacturing capabilities, and to the rescue, we have the Indian government, which has launched the production linked incentive scheme. And it has an overall outlay of 6,300 crores. So the goal of the PLI scheme is to lower the import dependency and create an export oriented base. And as stated in the PLI policy, India aspires to match the pace of advanced economies like South Korea and Japan by FY 27. And what is this PLI? How is the PLI policy going to overall impact our imports and exports? That graph is shown on the right side. So through PLI, it is expected that the base production is going to rise by at least 2.5 times. The imports are expected to reduce by 75%, and at the same time, the exports are expected to 3x. So the PLI initiative led by the government has also seen good response from around 75 companies, and you have major names like Tata Steel, JSW Steel, and Hindalco, which have applied under the PLI scheme. Let's talk about the next sub-segment, and that is aluminium. So, aluminium is the second largest metal market in the world in terms of volume after iron and steel. And in terms of reserves, India is fairly placed. So, aluminium is actually obtained by primarily mining bauxite. So, India has the fourth largest bauxite reserves in the world. Currently, China is ranked first, and United Arab Emirates is ranked second. So, but overall, if we see, aluminium is a metal that has been in demand. It had reached an all-time high in 2021. And what are the industrial application? It caters to the consumer goods sector. It caters to the transportation sector. It has wide applications across different fields. And if we go as per the US Geological Survey, there is still a lot amount of bauxite reserves yet to be discovered across the world. And if we look at the overall aluminium production capacity, in FY 16, it was 2.4 million tons. As of FY 24, it is 4.2 million tons. And how is India positioned in aluminium? Like, our current penetration is just 3.1 kg compared to the world average of 12 kgs and China's 31.7 kg. So ICRA has estimated that the domestic aluminium demand is going to remain healthy for the next fiscal one, and by 2033 we are expected to see the demand grow to 9 million metric tons. And coming to how is aluminum placed overall? So overall, so if you see that we are expecting the demand to jump from 4.5 million to 9 million in the by 2033. How is this growth going to be achieved? It's going to be due to its extensive use in the transportation and the energy sectors. So sectors like electric vehicles, renewables, modern infra, energy efficient consumers are such sectors where aluminum is very much needed, and this overall is going to lead to a to an overall demand of more than 10% CAGR. If we talk about the next important subsector in the metal segment, it's copper. So copper is the third most sort of metal after steel and aluminum. And India overall doesn't have as much reserves compared to steel or aluminum. So we have around 2% of the world's total reserve, but our manufacturing and production capacity stands at a small number of zero point 0.2. But again, there has been more emphasis by the government that it's going to be a good initiative on the demand for copper is again going to come through smart cities and the defense sectors, and as other sectors like EVs and infra grow, the demand for copper is also expected to remain healthy in the coming years. So, if we talk about the overall application of copper, copper is widely used in electrical products, and yes, and the Indian government is has launched many policies to increase the demand to meet the copper demand in India. The next slide shows that how government has been, pretty active in introducing policies to boost the metal sector. So the very first policy is the minerals and mineral development and regulation act. So this had been introduced in 2021. So the key goal is to increase the mineral production, and it focuses more on to increase the operational efficiencies in the mines and increase the investment in the mining sector. Then we have the national mineral policy, which was introduced in 2019, which aims to bring better regulation and enforcement. And since this sector is it's again it's very different from the other sector, so there is more regulation required. Then we have the skill development plan for the mining sector, where government is focusing to increase the skill development, like to train students and employees to contribute more to like making them ready for industrial ready skills required for this metal sector specific. And if we just talk about the numbers, the metal sector employs, if I talk about just the steel sector, it employs more than 20 lakh people indirectly and 6 people directly. So the skill development plan for mining sector aims to increase the capacity and quality of training infrastructure and trainer to address the actual skills that are required by the industry. Finally, we have the production linked incentive scheme. So the Ministry of Steel has signed around 57 MOUs with around 27 companies, and there is a planned in and this overall outcome is expected to generate an increased investment of 30,000 crores and a creation of 25 million tons of specialty steel in the next 5 years. Again, you have leading names which are contributing to the iron and to this particular scheme, that are Tata Steel, JSW Steel, Hindalco, and Steel Authority of India. Coming to our product, the product, so the Nifty Metal ETF is going to replicate the Nifty Metal Index, which represents the performance of metal and mining industries. So the slide showcases the index methodology used to create this index. So stocks are selected from the top from the top 500 stocks from the Nifty 500 index. So you will be having stocks from large, mid, and small cap segment. The weightage of each stock is based on its free float capitalization. And again, going by the standard index rule, there will be no stock that would be having a weight of more than 33%, and no top three stocks would have a cumulative weight of 62% at times of rebal. The index is reconstituted semi-annually, so you will be having portfolio changes, securities going in and out on a semi-annual basis, and the weights are rebalanced quarterly. And finally, there is a liquidity filter to create this index. The companies should have trading frequency of at least 90% in the last 6 months to get selected in this index. Currently, the index comprises of 15 stocks listed on NSE. If we talk about the performance of metal sectors versus, so we have compared it with the broad based indices. So since inception, that's since 2005, metal has generated a return of 13.4% compared to 15.2% of Nifty 50 and 15.6 of Nifty 500 index. In the last 1 year, the index has generated close to 42% return, and YTD as of August ending, it has generated 18% return. So, there's one key thing that needs to be noted here. Metal as a whole is more of a tactical sector. So, going by the simple macro dynamics, so when the economy expand, there would be more demand for construction, infra related activities, right? And at the same time, the demand for metal sector would also grow. So the metal sector overall does well when the economy is booming, and it corrects more when the economy is in recession or in downturn. So overall, it is more of a tactical play. And compared to the other indices, you will see that metal has specific periods of outperformance rather than having a sustained performance over the long term. So the next slide talks about the calendar year performance, and it's continuation of what I said previously, that metals has pockets of outperformance. For example, the year 2007 2009, metal index had generated a return of 230% and 143%. Just jump to 2021, metal index has overall generated a return of 73.4%. Years like 2016, 17, the index has outperformed by the other broad-based indices by a very big margin. And why is it so? As the economy expands, metal also does well. And this behavior is also observed when the economy recovers. For example, post the subprime crisis, metal sector recovered a lot, right? Whereas Nifty that recovered by 91%, the metal sector recovered by 232%. Again, a simple example of COVID. After COVID in 2021, the Nifty 500 index generated a return of 31.6%, but at the same time, metal had generated a return of 73%. And the reasons for that is pretty straightforward. As the economy booms, there's more demand, there is more infra spending, and that eventually drives the metal sector. But at the same time, we can't forget that it does come with volatility as well. So years like 2008 subprime crisis, where the broad market corrected by around 55%, metal corrected by 73%. You'll be seeing years like 2018, when there was correction in mid caps and small cap, the overall market corrected by 2%, but Nifty metal index corrected by a higher margin. So as the economy witnesses recession or downturns, your metal sector is going to suffer. But overall, at the same time, metal is a very good product in terms of tactical play. The significant outperformance highlighted in the year 2009, 21, or 17 prove the simple dynamics it has and the correlation it has with the broad market. And if we just talk about the last 10 calendar years, it has outperformed Nifty 500 index in 5 out of 10 calendar years. So overall, metal sector is more of a tactical play. If we talk about the top 10 stocks, so the top five stocks are Tata Steel, Hindalco, JSW Steel, Adani Enterprises, Vedanta, and Jindal Steel and Power. So the top 10 stocks carry more than around 92% weight of the overall index. The other five stocks have around 8% of the weight. The total portfolio is of 15 stocks. So, and it has again exposure to each of the sub sectors that we explained earlier, like steel, iron ore, or aluminium and copper. Comparing the performance metrics of the Nifty Metal Index. So, as explained earlier, so we have around 51% of the companies belonging to the iron and steel segment. Then we have around 23% players, 23% exposure to diversified metal players. We have around 17% exposure to aluminum companies, and the remaining exposure comes to zinc and copper companies. And if I talk about the leading names, Tata Steel and JSW Steel is the leading player in iron and steel. And if we like even Vedanta, but Vedanta is more of a diversified play. And within aluminium, Hindalco and National Aluminum State Board. And if you see the overall portfolio, it's a mix of private and public players. On the right side, we have shown the performance metrics. How has the sales growth been? So, if we see the overall, the sector has recorded positive sales growth in the past 3 years, with certain companies like Adani Enterprises, JSW Steel, and Jindal Stainless seeing growth rates as high as 45 to 60%. There are few companies like Hindustan Zinc and Copper, which have recorded negative sales growth. The net income growth is also, and again we have to look at one major fact that the overall net income varies a lot, because in the year there are investments. So you may see or there's high amount of capex done, you may see a dip in the net income, but the overall sales growth and the continuous push by the government indicator positive sentiment towards this sector. The debt to equity, again, it's fair as compared to the global counterparts. So there is debt from as good as zero. Like National Aluminum is a debt free company, and with Adani and companies like Adani having a debt to equity ratio of 1.67. The last slide, the last two columns showcase the return on assets and return on equity. So overall, there's a mixed bag of numbers over there. But if we talk about return on equity, it's been in the average range of 5 to 20 for different players. And lastly, why we should, think of investing in this particular product. So if any investor is looking to take exposure to the metal sector, so this is a one-stop product for you. You get exposure to the entire large, mid, small metal and mining companies listed on the National Stock Exchange, and all these companies are involved in extraction, processing, distribution of metals, the ones that we said: iron ore, steel, aluminum, zinc, copper. India has a major play on iron, steel, aluminum, and the other minor minerals like zinc and copper. If we talk about potential of this sector, it has received increased boost from the government via various schemes. The PLI is a standout scheme where the government aims to attract investments as high as 30,000 cr. And going forward, as the demand and as the infrastructure spending increases, and there is more investments in new sectors like railways, airlines, capital goods. So the metal demand is again going to be met from India, and this alone, the alone infrastructure spending is going to contribute close to 25 to 30% of the overall demand that's required. In terms of opportunity, as I said, India is fairly placed in terms of resources. We are the second largest steel producer, fourth largest in terms of bauxite reserves, third largest lime producer, and other things that we had highlighted earlier. So if you are looking to take tactical exposure based on short term as well as long term view, so and you want to focus and your focus is more on infrastructure and manufacturing, so metal sector is a good sector to bet on. And going forward, as infrastructure spending increases, metal sector is going to be the key beneficiary. In terms of performance, we saw a mixed bag of numbers. So metal sector has seen good amount of outperformance in the last 10 calendar years. Compared to Nifty 500 index, it has outperformed it in 5 out of 10 calendar years. In terms of year in after recoveries, metal sectors tends to do well during economic booms, during expansion cycles. Metal sector would definitely outperform your Nifty 500, Nifty 500 or the other broad market indices. But during recessions, you may witness pockets of underperformance. So overall, that's it from my side. If you are keen on taking tactical as well as long term play on this sector, this product would definitely add value to your portfolio. So I'll open the floor for questions. You can put them in the chat box directly. Okay, so there's one question. Could you please explain in brief by displaying performance metrics? Like, okay, just quickly go back to that slide. Okay. So the performance metrics slide, it's so in terms of metal sector, we have highlighted the key performance ratios that an investor should see while investing in this sector. So the first two ratios are pretty straightforward. We have shown sales average 3 years average sales growth and net income growth. So there's a good so in terms of sales growth, out of the 15 players, 14 have shown positive numbers. There is Hindustan Copper, which has shown negative sales number. Then we have net income growth. So overall, the net income growth has been again a mixed bag of numbers. For some players, it has been negative, but overall, it has. If we at a compare at a if we take at an aggregate level, it's positive. On the right side, we have shown debt to common equity. So Indian metal companies are well positioned compared to their global counterparts in terms of debt. Yeah, there are companies like Adani Enterprises or JSW Steel that have higher debt levels compared to the industrial average. And finally, we have shown return on assets. The assets being, since it's an asset heavy industry, so return on assets, it's displayed in the percentage form. So return of asset proves to be a good ratio over there. And finally, what value has been delivered to the shareholder, that's again return on equity over there. So the statistical slides, yeah, you can get them. We will be uploading this presentation on our website, so you can definitely get the content from there. So there's one question. What are the other metal sector specific funds? So in terms of metal sector specific funds, so there is one fund that's not exactly metal, that's the manufacturing fund that we have. So the manufacturing fund also has a good amount of exposure to the metals and mining segment, but that's going to be a sub part of the portfolio. If you want a pure play metal sector exposure, this is the one stop product, I'll say. I'll move on to the next question. Okay, why separate metal fund in terms instead of infra? Yeah, there will be overall, but again, you will be having other sectors as well. Your overall stocks in infra would be industrials as well, capital goods as well, but your metal would be only metals and mining sectors. So the ETF is going to be, it's open for subscription right now from 28th to 30th September. So someone has asked that what would be the numbers for 15 years SIP? Um, So again, metal is as I said, it's a tactical kind of more of tactical product. So commenting on a number won't be right away. In high debt, so there's one more question. In high debt companies like Tata Steel, uh and etc., there's not a risk for see in terms of high debt. So whenever there are, so in metal sectors there are investment cycles, right? So in those particular segments you would be seeing a high debt ratio, but overall Tata Steel, it has reduced its overall debt compared to its previous years. Yes, this would be listed in the stock market on 4th of the allotment date is 4th October, so you can expect 9th of October. So there's one question that whether it's the right time to enter metal valuations. Yeah, see, but if you compare the overall market, everything is trading at a premium. And if we are expecting an overall boom in the economy and we're expecting that there's going to be more infrastructure spending, yeah, metal can be good from a 3 to 5 year long point of view. So the initial listing price would be based on the closing index value. For example, if the index, I'll take a hypothetical number. If the index value is 30,000, so that divide by 30, so your NAV would be somewhere around 30. Again, that's just a example that would depend on the value of the price return index on that particular day. So there's one question related to PSU rally. So your metal sector is a mix of private and public players. So out of them, if you see, your National Aluminium is one of the is one of the public sector players. Your majority of the and Steel Authority of India again is a public sector player, but your the majority of players in this particular index are the private players. And in terms of PSU rally, yeah, overall PSUs have risen, but they have again, the rally has been on account of good backdrop of numbers as well, right? The financials, if you compare it back in 2018 or 2019, yeah, they have improved a lot. Yeah, overall, if you think that there's a question related to for investing in metals for long run, yeah, for long run, as India propels to become a $7 trillion of economy by 2030, yeah, metal is going to be one sector that is going to benefit a lot. So yeah, you can definitely consider that. It's a ETF only, so you won't be having SIPs available in it, and the minimum investment is 5,000 in the ETF. So for everyone's information, I'll also just showcase the NFO timeline. So the NFO has started from today, September 20th. The benchmark of the index, as I mentioned, it's Nifty, it's a passive scheme. The allotment date would be October 4th. So the listing happens 5 days post the allotment. So you can expect a listing around October 11th or 12th on NSE and BSE. The minimum amount during the NFO is 5,000. There would be no exit load charge. And again, in terms of TR, uh, we would be coming with the lowest priced metal ETF in the market for sure. You can visit our website for the overall details in terms what is the expense that are being charged. Yeah, in terms of private and public exposure, as I said, there are close to 13 companies that are private, and 2 are this one PSUs. Sorry, 3 are PSUs and 12 are private. NMDC, National Aluminium, and Steel Authority of India. As I previously mentioned, the ETF would be listed on the closing price return index on 4th of October. So your offer price would be the closing index value on that particular day, divided by the number of, like, if in case we are saying that our division ratio is 1,000, so your NAV would be around 30. Yes, you can switch your funds. Yeah, there is STP option available. So you can visit our website for more detailed info for that. You can switch your funds from liquid fund to NFO, and that's fine. So there's one question, which would be better, ETF or MF? See, metal ETF is more of a passive nature. We don't have any MF product right now on this. So you only have the ETF route to invest. We have not opened the fund of fund for this particular fund. So you can directly invest in ETF. And in terms, ETF would be again more cost efficient, and you can actively trade it on exchange throughout the day. So ETF, you can always alternatively look for a ETF versus an index fund. So regarding participation in the NFO, you can directly visit our website for or the invest app. So you'll be getting more information on that. You can visit the Mirae Asset website or in social media handles for that. I'll take one last question. So what is the major benefit in applying for NFO? Please elaborate. So as I said, so this is again a pure play sector product, right? It's giving you exposure to the entire universe of large, mid, small metal and mining companies listed on NSE. You are getting exposure to companies which are involved in extraction, processing, distribution of metals, including iron ore, steel, aluminum, etc. There has been a good push towards by the government by introducing the PLI scheme. It is expected to attract a good 30,000 CR in the next 3 to 5 years. And as I said, that as metal sector grows and the infrastructure spending increases, and as I said, the demographic dividend of India, as the net income level rises, there would be a increased demand for metals, and 25 to 30% of this increased demand is going to be met through the domestic metal sector. In terms of overall play, we are a good well positioned player in the metals and mining play. We are top producers of steel, aluminum, as highlighted earlier. In terms of performance, you have seen good pockets of outperformance, and overall, if you're convict, you can invest on a short term view as well as a long term play, because India's focus on infrastructure and manufacturing is going to increase. So as I said, the valuations are stretched, but yeah, if you look, they have the back compare the numbers or the earnings number compared in 2018 or 19 or in the last 5 years, it's been fairly better. And overall, if the now overall numbers are like the overall numbers are getting better, so metal sector will also, and the economy booms, this is going to also, have a better impact in the coming future. See, it's very simple that if you are looking to invest from a tactical point of view, you can invest, but from a long term point of view, again, the infra spending is also going to increase, and manufacturing is also going to get a boost. So you can you can definitely consider it for allocation. The allocation period of funds, you can invest right from September 28th to September 30. The allotment would be done on 4th of October. So that's it from our side. If there are any more questions related to this product, you can directly visit our website or visit our social media channel. We look forward to your participation in this product. That's all from my side. Thank you.